Hey there, crypto comrades! Welcome back to another roller coaster ride through the wild world of cryptocurrency. Remember those Wild West days of Bitcoin, when it felt like the digital gold rush and everyone was trying to stake their claim? Yeah, those were fun, weren't they? The excitement, the adrenaline, the sheer unpredictability of it all, but lately things have been a little off. The market's been more unpredictable than ever, and not in a good way. The market's been doing the jitterbug, and not the fun kind. It's been more like a chaotic dance that leaves everyone feeling dizzy and uncertain. More like the kind your weird uncle does at weddings. You know the one. Awkward, unpredictable, and a little bit embarrassing. The big question on everyone's mind, is a crypto crash coming? Short answer, maybe. But let's not jump to conclusions just yet. Longer answer, let's dive into the digital abyss, shall we? There's a lot to unpack here, and it's not all doom and gloom. Look, I'm not here to scare you, okay, maybe a little. But seriously, knowledge is power even when it comes to your digital piggy bank. But seriously, knowledge is power even when it comes to your digital piggy bank. The more you know, the better prepared you'll be to navigate these choppy waters. We're going to break down the good, the bad, and the ugly of the current crypto climate. It's a mixed bag, and understanding it can make all the difference. We'll look at the warning signs, the potential triggers, and most importantly, what the hell you can do about it. Because let's face it, doing nothing is not an option. This isn't financial advice, by the way, just a friendly reminder from your favorite crypto enthusiast. I'm a comedian, not your financial advisor, so take everything I say with a grain of salt and maybe a dash of humor. If you're looking for someone to blame for your bad decisions, might I suggest looking in the mirror? Just kidding. Or am I? Or am I? Anyway, let's get down to business. The crypto market is notoriously volatile, and it's crucial to stay informed. Anyway, let's get down to business. The crypto market is notoriously volatile. The crypto market is notoriously volatile. It's like a roller coaster ride with more twists and turns than you can count. It's like that friend who's always up for a good time but also prone to epic meltdowns. You never know what you're going to get. We've seen massive gains, gut-wrenching losses, and everything in between. The highs are exhilarating, but the lows can be devastating. And right now, well, the market's giving us some serious side-eye. It's like it's waiting for the other shoe to drop. So grab your hard hat, your antacids, and maybe a stiff drink. It's time to talk crypto crash. But don't worry, we're in this together. It's time to talk crypto crash. Buckle up, because it's about to get bumpy. But remember, every storm eventually passes and the sun will shine again. Alright, let's talk about the elephant in the room, or should I say the bear in the blockchain. The crypto market is showing some serious signs of stress. It's like watching a roller coaster, but without the fun. Prices are plummeting and investors are on edge. Think of it like this. Remember that time you ate a questionable gas station burrito? You knew it was a bad idea, but you did it anyway. Yeah, the market's feeling about that bad right now. It's a mix of regret and anxiety, with a dash of panic. First up, we've got regulation rearing its ugly head. Governments are stepping in, and they're not playing around. Governments around the world are finally starting to realize that crypto isn't just a fad, it's here to stay, and they need to get a handle on it. They're also realizing they can't tax what they don't understand. And let's be honest, most of them don't understand it at all. So naturally, they're scrambling to slap some rules and regulations on this digital Wild West. It's like trying to tame a wild stallion with a piece of string. And that, my friends, is making investors a little jittery. No one likes uncertainty, especially when it comes to their money. Then there's the issue of good old-fashioned market manipulation. It's been around forever, and it's not going anywhere. Remember those shady pump and dump schemes? They were the stuff of legends in the stock market, and now they've found a new home in crypto. Yeah, they're still a thing, and they're more sophisticated than ever. And with the rise of social media, it's easier than ever for whales to manipulate the market and leave retail investors holding the bag. A single tweet can send prices soaring or crashing. Not cool, whales, not cool. Retail investors are left picking up the pieces, and it's not a pretty sight. And let's not forget about the ever-present threat of hacks and scams. The digital world is a playground for cybercriminals. Remember that time a bunch of hackers stole millions of dollars worth of Bitcoin? Yeah, fun times. It's like a heist movie, but with real money. The point is, the crypto world is still a bit of a digital Wild West, and that makes it a prime target for bad actors. It's a high-stakes game, and not everyone plays fair. And when people get scared, they sell. Fear is a powerful motivator, and it can lead to panic selling. And when people sell, well, you know what happens next. Prices drop even further, creating a vicious cycle of fear and selling. It's a tough time to be in the market, but remember, every storm eventually passes. Okay, so we've talked about the warning signs. Now let's talk about what could actually send the crypto market spiraling into the abyss. Imagine a line of dominoes, all perfectly balanced. All it takes is one little push and boom, the whole thing comes crashing down. One potential trigger, a major economic downturn. Remember the 2008 financial crisis? Yeah, that wasn't fun. And guess what? Crypto wasn't exactly a thing back then. If the global economy takes a nosedive, crypto could be in for a rough ride. People tend to ditch their risky assets when they're worried about paying rent. Another possibility? A major regulatory crackdown. What if governments decide that crypto is just too risky and decide to ban it altogether? It's not outside the realm of possibility, and if that happens, well, let's just say it wouldn't be pretty. And then, there's the ever-present threat of a black swan event. These are unpredictable events that come out of nowhere and shake up the entire system. Think 9/11 or the COVID-19 pandemic. Could another black swan event be lurking around the corner, ready to wreak havoc on the crypto market? Only time will tell. Section 4, don't panic yet, strategies for weathering the storm. Okay, so we've covered the bad news. Now for the good news, even if the crypto market goes full-on dumpster fire, it doesn't mean you have to go down with the ship. There are things you can do to protect yourself or at least minimize the damage. First and foremost, don't panic. Easier said than done, I know. But seriously, if you start making rash decisions based on fear, you're more likely to make things worse. Take a deep breath, assess the situation, and then make a plan. One of the best things you can do is diversify your portfolio. Don't put all your eggs in one basket, especially if that basket is made of volatile digital tokens. Spread your investments around, both within the crypto world and outside of it. Stocks, bonds, real estate, gold, beanie babies, whatever floats your boat. Another smart move? Set stop-loss orders. These are like little safety nets for your investments. You set a price at which you're willing to sell, and if the price drops below that, your order is automatically executed. This can help you limit your losses if the market takes a sudden turn for the worse. Section 5. Ask the Oracle expert opinions on navigating the dip. Okay, so you've diversified your portfolio, set your stop-loss orders, and you're feeling prepared for whatever the crypto market throws your way. Diversification is a key strategy to mitigate risk, spreading your investments across various assets to avoid putting all your eggs in one basket. Stop-loss orders, on the other hand, are your safety net, automatically selling your assets if they drop to a certain price, thus limiting potential losses. But what about actually buying or selling during a dip? This is where the real challenge begins. The market can be unpredictable, and making the right move at the right time requires not just knowledge but also a bit of intuition and experience. That's where things get a little trickier. The volatility of the crypto market can make it difficult to decide whether to hold, buy more, or sell off your assets. Some experts will tell you to buy the dip. This strategy is based on the idea that when prices are low, it's a good opportunity to purchase more assets at a discount. The logic here is simple. When the market is down, prices are lower, which means you can buy more for your buck. Essentially, you're getting more value for your money, and if the market rebounds, your investments could see significant gains. And if the market recovers, you'll be sitting pretty. Sounds good, right? The potential for high returns is certainly appealing, but it's important to remember that this strategy comes with its own set of risks. Well, it can be, but only if you know what you're doing. It's crucial to conduct thorough research and understand the market trends before making any decisions. Other experts will tell you to sell high and buy low. This is a fundamental principle of investing, aiming to maximize profits by selling assets when prices are high and buying them back when prices are low. This is basically the golden rule of investing, and it applies to crypto just as much as it does to any other asset. However, executing this strategy successfully requires precise timing and a deep understanding of market cycles. The problem is, timing the market is incredibly difficult, even for the pros. Market conditions can change rapidly, and predicting these changes with accuracy is nearly impossible. If you sell too early, you could miss out on potential gains. This can be particularly frustrating if the market continues to rise after you've sold your assets. And if you buy too late, you could end up buying at the top of the market, right before it crashes again. This scenario can lead to significant losses as the value of your investments plummets shortly after purchase. So, what's the answer? The truth is, there's no one-size-fits-all solution. Each investor's situation is unique, And the best strategy depends on a variety of factors. It depends on your risk tolerance, your investment goals, and your overall financial situation. Some investors may prefer a more aggressive approach, while others might opt for a more conservative strategy. Consulting with a financial advisor can help you determine the best course of action based on your individual circumstances. Remember, investing in crypto is not a guaranteed way to make money. It's important to stay informed, be patient, and make decisions based on careful analysis rather than emotions. By doing so, you can navigate the dips and peaks of the market more effectively and increase your chances of long-term success.